here on Fridays, we're going to be dabbling down into my $248,000, which in these volatile moments, I don't know where it sits until we get into the accounts, but of course I'm talking about my dividend stock portfolio here, folks. But more importantly, before I reveal any of that, because I did do some stock purchases today, I got to send out a market warning, which is something Cathie Wood has been sending out. Is she's been mentioning something called a valuation reset. And in the valuation reset, Cathie's going to sell off all their lower stocks for a tax write-off, in which they're going to put all that money into their higher convicted stocks. And you might be thinking to yourself, what the hell is she talking about? That's kind of scary, isn't it? Well, in the clarity of my transparency and all the wonderful homework I do for you guys, hit that like button and let's zoom out by talking about hyperinflation. The hell is hyperinflation? Well, let's start by talking about what regular inflation is here, folks. Regular inflation is where in scary times the government feels bad for you. So what do? They print them dollars off, baby, as Jerome Powell likes to do. And if you understand inflation, for every $1 that exists and you print one next to it, it kind of devalues the one next to it. Because we all know, just because a dollar says it's worth a dollar, it's not actually worth a dollar here, folks. And we can take a look at the purchasing power of the USD by going on to the USD chart, which we can see since the Fed has been wonderfully printing off bills, the currency is slightly devalued. But this has nothing to do with what I'm talking about when it comes to hyperinflation. What the hell is hyperinflation? Well, let's presume you're all terrified. You're sitting at home. You're like, damn, I'm scared. I'm going to stack my cash up. And we're just going to wait to see how this pandemic plays out, which right now, we're starting to see the end of the tunnel here. I know by summer, we're going to start getting vaccines in our arms. People are going to have all this cash. Airports going to be opening back up. People are going to want to travel. But in this pandemic, a lot of these businesses that, people used to use have been retracting. They've been firing staff, parking planes, et cetera, right? So let's presume we get on the other side of this pandemic, guys, and all of a sudden everyone's like, hey, there's light outside. We can actually go outside again, guys. And everyone has all this money. What do? They're going to be just going out in droves. What happens to supply and demand when there was a lot of demand for something where there was initially no supply? We get into a moment of inflation. We're going to experience a moment, guys, where the US dollar's gone down in value. Its purchasing power has been less, but the price of goods and products are going to be going up in a very narrow period of time. Jerome Powell has actually mentioned this. And what do you think happens when these moments hit us? Well, the Federal Reserve kind of cools the economy down. How do they cool the economy down? How do they level the playing field? Well, they raise interest rates, folks. And what happens when you raise interest rates? Well, everyone that has loans, including those businesses that you hold, all of a sudden start losing the power of revenue and earnings capability, because at the end of the year, they got to pay more on interest, folks. And this is where Cathie Wood comes into play when she's talking about a valuation reset. In a period of time when it is ever cheap to own money at basically zero interest, I can borrow all the money I want to scale my business. If I'm a public business that is trying to scale here for the last few years and I have nothing but debt on the balance sheet, really going to hinder the future potential earnings. And this is going to reset the value of highly leveraged companies, which we are very likely to see in the coming future, which is why it's so heavily important that you pay attention to how your portfolio is diversified here. And obviously, I believe Cathie Wood will liquidate the lower assets to buy things like Tesla, which I still believe are truly slightly overvalued here, guys, just my opinion, because it's getting right back to the price where I sold it at. But let's put that aside. Let's talk about my own personal portfolio and what I'm doing and get into my accounts here, guys. But let's start with the broader overview, which, by the way, if you guys want to support this channel, you kind of like the way I overview my portfolio here. We built all these custom spreadsheets. You can find them at thechartmaster.com. Use coupon code Passive Income Investor for 15% off, of course. But today, I'm not really disappointed. I have some crazy volatility. I am down massively on some positions, but the portfolio is still actually higher than where it was at the beginning of the year. So this correction in some of my companies hasn't really made that big of a difference. And that's because I believe I'm properly diversified and I mitigated my risk at a very appropriate time. Everyone reams you out when you sell your Teslas and your Mind Meds, and I know I've mentioned this like a broken clock before, but it's in moments like these, guys, where I'm not sitting down on my portfolio for the year, and a lot of people that were highly leveraged and speculative and growth plays are starting to experience these dips. And this is where you're going to get tolerated and understand if you were over leveraged, because clearly you might not be sleeping easy at night thinking about where the market's going to open. I, however, don't really care. I'm still collecting a decent amount of dividends for the month. I think I got $400 in dividends for the total month. Not as good as last month, but the staggered payments of quarterly dividends. But nonetheless, folks, let's scroll down and see where my holdings look and what I bought. And then we're going to get into the individual accounts themselves, because I promised you yesterday I would show you how my banks are looking finally. Those banks have had a nice recovery. But taking a look, folks, when we take a look at the individual holding diversification right now, the thing that worries me the most is Ryokan. It makes up 12% of my portfolio. It went on a bloody tear lately, and I don't like when my stocks start getting so big, because then I have to start consider pulling them back out of just a risk tolerated basis, and just to be smart, right? But obviously where I'm getting hit the hardest is in my aggressive growth. My aggressive growth took a big ding, and it was actually down to an 8% weighting in the overall portfolio until I added some capital to it. Because I mean, when we take a look at my SRAC position, which today is worth about $6,459, that is only because I added $1,000 to it over the last couple days. So if you want to take a look at that at any other time, guys, I am down like 30 or 40% on that position overall. MindMed took a huge hit over the last few days, driving down my aggressive growth, and even ARCG has been taking a pretty major hit. So yeah, my aggressive growth took the biggest hit out of them all. My actual growth, and this is where my my Microsoft, my QQQs, my BABA comes into play, and that's been relatively okay. Obviously we're seeing a bit of a pullback in the NASDAQ 100, but today when it's rebounding a bit isn't actually hitting the portfolio all that hard. But just getting into the accounts here just to show you guys what I have done. So my SRAC position, I actually bought another 23 or 24 shares this morning, which we can see in this account. I'm now up to 160 shares. This is not my total position. I own this amongst all of my accounts. But yeah, guys, between that and MindMed, I don't know what to say about it. I'm terrified of SPACs. SPACs have been selling off galore. Spec plays have been selling down drastically out of fear. And this to me is a bit of a buying opportunity, in my opinion, because the fundamentals of the company haven't exactly changed, and I understood the risk when I was getting into it. And just taking a look at my TFSA, I am down pretty heavily, again, on another small position for SRAC here. But when we're talking about some of the big risk with hyperinflation, I want to be exposed to the broader market for recovery plays, for financials, because banks are going to get to see the recovery when interest rates go back up, which they're already doing amazingly. So if interest rates do go up, they're just going to be doing even better from where they sit. And in these accounts, I'm just starting to see some green. I did buy the bottoms in the banks, and I was also buying the tops years ago. So this is kind of the balancing act of it. But we can see that I've made a really good return in my RBC account, because I'm up 30% on my few BNS shares, starting to see a 13 to 14% in TD. Everything is quite well balanced in my opinion, which, like I said, when I look at the volatility on my StockTwits watch list some days and I go into my portfolio overview, I'm actually shocked at how stabilized the entire thing is doing. But this comes from due diligence, and I think just being steady Eddie here and making the appropriate risk decisions. But moving forward in this kind of market volatility, at which I'm hoping a crash happens, there are a handful of companies that I have talked about on my watch list radar. One of them that I've talked about a lot, I won't buy it because it's in a downtrend right now on a revenue and earnings basis, and I think it will be a relatively decent recovery play, is of course McDonald's here, folks. But it's trading down a little bit, not enough for me to want to buy it. But if this thing falls off a cliff, it has been on my buy list forever. I wish I picked it up in the initial crash that happened, but I didn't get that lucky. So it's on my buy list. I've been looking at Pfizer pretty aggressively. Here's another recovery play. They just did $150 million in COVID vaccine sales. So I'm pretty confident that that's something that's going to continue to help their business as other parts of their business struggle. But it's trading at a good discount. Buffett likes it. I've been watching this one pretty aggressively, and might make my buy list here. Of course, I talked about yesterday Hydro One. I talked about TELUS already. These two are on my Canadian buy list if they continue to dip any heavier. Facebook I mentioned here as well, guys. If Facebook drops, even here, it is a screaming buy. I don't know how else to tell you, but if you're going to buy tech right now, I'd be buying Facebook. And if it dips below 250, even though I own a lot of it already, like $13,000 or $14,000 worth of it, I'm going to be buying more. To be honest, I want to use Facebook as kind of my savings account. Facebook, to me, if I'm being bold, over Apple or Microsoft or Amazon, Facebook is like the Coca-Cola of the S&P top 10 companies, because it deals in a business that is so pure play to advertising, and it's so easy to grasp and understand. And when you look at the growth rate that isn't going to be turning around even once we get on the other side of this pandemic, in my humble opinion, now that they're monetizing WhatsApp and selling some data through that, guys, I want to see it dip. I really want to see it dip. I mean, right now we're trading down 10%. I want to see it do like these lows that it does, where it can drop 30% out of nowhere. And I will likely take the vast majority of my savings account, and even probably the tax money that I owe the government from this year going into next year, because I'm going to be sitting on that capital for a year. I'll probably take 50% of it and put it in Facebook, if I'm being honest, at the right price. Obviously, it takes the right price. We're not there just yet. And finally, guys, the only other thing I can really update you on is my crypto experience. I still haven't been able to get access to crypto.com. I haven't been able to get access to basically anything. No reply from Coinbase. Coinbase, man, it frustrates me to no end. So I'm still waiting to get my funds approved with Wealth Simple, and then I'm gonna be messing around with my Wealth Simple account and just the Bitcoin experience. Coin to me, guys, is not a buy or hold or sell. I don't have an opinion on Bitcoin where I can justify saying it's just this great thing to own for any particular reason. It's just a very weird, unusual asset class that I don't think serves any purpose to what these Bitcoin pumpers have been telling us it has been purposed for, and I think it's going to be something that the rich is largely going to gobble up, and they're going to use it to their advantage to introduce to the broader market when we can start purchasing things like Teslas or things like through Amazon. And if that becomes a reality, guys, the rich people that have gobbled this up, which is the majority of the Bitcoin holders right now, it's so manipulated. It hurts. It breaks my heart that Bitcoin will never be used for those original intentions of being kind of like this off-diversified currency. It's just going to be used to make rich people richer. I think that's going to become the broad case of it in the near term. Highly manipulated. And especially when you go onto these comments, guys, go look at every YouTube comment under the sun right now. Like, people can pump this thing 9 ways to hell and not have to worry about the SEC coming down their back. And that's what I said about Elon Musk. Best thing he could have ever bought, because he can pump it to the moon and back. And he did. He pumped it, guys, and it worked. And the SEC will never be able to say a word. So anyways, I will be buying Bitcoin. I'm probably going to be buying about $1,000 to $2,000 worth of it in the Wealth Simple account over time, perhaps. I really want to own it in the crypto account to try and leverage it out to see if I can actually turn it into like a dividend income stream, because obviously you can do short-term loans with Bitcoin. And these are all things I've talked about yesterday, guys, that I'm just kind of reiterating on, that nothing has changed today for me around that. But it is something I'm still paying attention to. So in light of all of this, I'm going to pass the question off to you. I'd love to know what you think this Friday in that comment section below. If you want to continue the conversation, we go live every Friday over at the Passive Income Educator, guys, live tonight, 10 p.m. if you'd like to continue the conversations. But in light of all of this, stay cool, stay awesome, and I look forward to catching you tomorrow.